Hey everybody, welcome to the Investing Education channel again. So it's March, February's ended, and let's have a look at how the real money portfolio has been doing. Well, the real money portfolio has been mainly treading water in Feb. It's up only about 1%. So that's good and bad. I mean, it's obviously you want the account to be up higher, but it also sets it up nicely to go up higher in the coming months. So I do definitely expect it, unless there's some major, economic news. I do expect it to definitely go higher in the coming months. And it's not really unexpected either. January was one of the best months the stock market has seen for quite some time. So you do expect the stock market to take a breather after such a hot January. In terms of the holdings, not many changes. That's basically the motto of this account. There won't be many changes. Turnover will be always at a minimum as far as possible. I don't really intend to sell any of these stocks for a very, very long time. I do intend to add in more money and to buy more of these stocks as and when the opportunity presents itself. I think one stock in particular took a bit of a beating in February. That is Booking Holding, and as you can see, Booking is about 7.8% of this account. So Booking, of course, is in the travel, is an online travel agency, and it's one of the big two. This Booking and this Expedia, and the C Trip as well, but Booking holds a stake in C Trip, and I mean, in terms of online travel agencies, you really think of the major players, and those would be Booking and Expedia. I do like Booking a little more than Expedia, which is why it has a bigger position in my account. And I do like Booking Holding as a stock in general as well. It has this network effect basically, right? And it's riding this tailwind of growth in online travel commerce also. And as you can see in this article, Booking does have a tendency to lowball expectations, and then to beat expectations when the time comes basically. So I'm not freaking out basically on Booking Holding. I intend to hold it. I'm not adding more at this point because I already feel I have a sizable position. If I had about maybe 3 or 4% of Booking Holding in this account, I might have added a bit more. But I won't be adding at this level for the moment because it already has a sizable position in the real money portfolio. I thought I'll share some of the stocks I track, and basically I have a watch list, right? So I intend to invest in very high quality companies, and only about 10 to maybe 20 at the maximum. But of course, I track a number of companies. You can see here there are about a few hundred companies here maybe. And some of these companies I track because I'm interested in buying them, and I'm researching them further and looking for a good entry point. And some companies I just track because they're competitors to some of the other companies that I own. So you can see many companies here. You can see Intuit, there's a stock I'm interested in, Shopify. Johnson & Johnson is becoming a competitor to Intuitive. I'm interested in that as well. Of course, the stocks I own like MasterCard are there as well. Booking is here. I'm interested in FedEx. I bought FedEx when it fell quite a bit in December. So I'm tracking that as well and seeing how it goes. So let's move on to the comparison. So as you know, I compare how my portfolio does against Warren Buffett's Berkshire Hathaway. I compare it against the S&P 500. I compare it against a company called Markel, which I feel is like a mini Berkshire Hathaway. It's run by a very talented manager as well. And I decided to add in the Nasdaq ETF as well. And also I compare it against Fundsmith, which I'll come to a bit later. So the reason I added the Nasdaq ETF is because I think it's one of the preeminent ETFs available as well. And so basically the point is, if my real money portfolio is not doing better than the ETF, then I should just be investing in the ETF basically, or in Berkshire Hathaway, or in FundSmith, or in Markel, right? So far for this year, the account has been beating all of them, right? But the competition will get tougher. Let's see. It's beaten the Nasdaq ETF only by a tiny bit so far. So it's up. The account is like up about 13.1, and the Nasdaq ETF is about up 13%. But over the long run, I expect the real money portfolio to beat all of this. So let's see how that goes. So you can see, in comparison to some of these funds and companies, how the real money portfolio is doing. And then let's switch over to FundSmith. So FundSmith did about 8.88% so far. So it's definitely picking up. It had a bad 2018, but it's definitely picking up. And of course, I think over the long term, I think FundSmith will be the major competition to my real money portfolio, and the goal is to beat FundSmith. And if I can't beat FundSmith, basically I should be investing in FundSmith, and I shouldn't be wasting my time, right? Okay guys, so that's the update for March. Let's see what March brings, and I'll let you know how the account is doing again very soon. Take care and have a great day.